everyone, this is Dawn Connors at Mortgage One, and I am excited to bring you this video, the 1st of January, on market updates and what is going on with interest rates. So, before I get started, please like, subscribe, and share this video out. I definitely appreciate it. My channel is dedicated to 2 mortgage videos each week in which I give fantastic information on mortgages and what's going on in our markets. So, let's get started. Interest rates. Freddie Mac released that interest rates 1 year ago were at 3.64% this time last year. And as of the 1st of January, they came out at a record low of 2.64%. So this week they're bustling up a little bit, and I'll explain that as well. But with interest rates being a full percentage point lower this year than last year, that is incredible. Freddie Mac also released that there were 17 historical lows from last January to now, this January. 17. Wow. So, Freddie Mac has been recording interest rates since 1971. So these interest rates that have hit these historical lows are the lowest reported since 1971. That is super interesting to know. The other thing you should know is that the yield on bonds finally increased above 1%, which has been a long time waiting. So as the Fed funds go above and yields increase on bonds, interest rates will follow suit. So that's why markets this week opened up a little bit higher. The other thing you should know is as the stock market goes, so will interest rates. So if interest rates plummet, then the market is doing poorly. If the market's doing well, interest rates will increase as well. Another thing to know is the Federal Reserve has bought 120 billion bonds every single month since the beginning of the pandemic. 120 billion. So what happens is as they buy more bonds, it suppresses and keeps interest rates low and keeps our money low as well. So they're purchasing bonds to keep our interest rates low. As they stop purchasing bonds or purchasing them at a slower rate, that release of that money will cause interest rates to go up. It is speculated that interest rates will soften and will start to rise up moderately, is what Freddie Mac said. So it would be very moderate increases through this year in the spring and summer sales season. I will tell you that the historical lows has caused buyers to be willing to buy homes sometimes at $30,000, $40,000, $50,000+ above what they have in the past because their payment is relatively low even though the price of the home is relatively high. So as interest rates climb up, and it will cause a little bit of suppression in the growth of our home buying prices. So it'll be interesting to see. But even if interest rates go back up to 3.64%, let's say, what they were this time last year, they are still at historical lows for sure. Not quite historical lows as this year of the pandemic where they reached 17 times lower than 3.64%. However, very, very, very good interest rates. So that's kind of what I'm seeing in the marketplace. I wanted you to know where rates were at come the 1st of January, where they're at today. They're about 1/8 to 1/4% percentage point higher this week opening up, and where they're segmented to go. According to Freddie Mac, who keeps track of all the interest rates and moderates them, they say that there will be moderate increases through the year. So moderate increases I would think would be in increments of 0.1% increases. Very, very small. So $10 per every $100,000 in mortgage payments. This is Dawn Connors at Mortgage One, providing you fantastic mortgage solutions. Please like, share, and subscribe to this video. Thanks for watching. I hope you found some great value in it.